Electric vehicle or EV startups have been hot on investors' radars in recent years, driven by the global push towards sustainable transportation and the success of established players like Tesla. Among the newer entrants is Mullen Automotive, a California-based company making waves with its ambitious plans to produce high-performance EVs. Mullen is working on multiple models, including a supercar called the Mullen GT and GTRS and an SUV, the MX-05. However, it has yet to deliver any vehicles to the market, and its stock has been highly volatile, with sharp ups and downs driven by news releases and market speculation. Recently, Mullen has been in the spotlight again. Its shares have been hit by short selling and dilution concerns, causing the price to fall to record lows. So, what's the outlook for Mullen? Is it a promising investment opportunity, a speculative bet, or a risky proposition? In this video, we'll explore the latest developments and trends around Mullen Automotive and provide insights and analysis to help you make informed decisions about this EV startup. Mullen Automotive is a relatively new player in the electric vehicle market, having been founded in 2014 in California. The company's initial focus was on building high-performance EVs, with the goal of competing with established brands like Tesla. Since then, Mullen has been working to develop a range of EVs, from high-performance sports cars to practical commercial vans. However, the company has faced several challenges along the way, including production delays and legal disputes with partners. Mullen Automotive's future is uncertain, as it needs to maintain its support level of 10 cents. On April 14th, Mullen's pre-market dropped 2.5% after competitor Lucid Group underperformed in both production and deliveries during Q1. Consequently, Mullen's stock price also decreased, trading at $0.1014 in the pre-market. This news puts the spotlight on Mullen's prospects. Lucid Group recently announced that it produced and delivered significantly fewer vehicles in Q1 than Wall Street had estimated. Specifically, the luxury EV maker produced 2,314 vehicles and delivered 1,406 during this period, compared to the previous quarter's figures of 3,493 vehicles produced and 1,932 delivered. This represents a 34% drop in production and a 27% decline in deliveries sequentially. Such results indicate that the EV market is currently facing headwinds, raising questions about Mullen's future prospects as well. Some analysts attribute Lucid's weak performance to Tesla's aggressive price cuts in the first quarter, but Lucid's production woes also seem to be a significant contributing factor. Given that Lucid's market capitalization is about 60 times greater than Mullen's, this negativity affects all other EV manufacturers below it. On April 20th, Mullen's stock dropped by 5.8% and hit an all-time low of 8 cents. Despite the company's announcement in March that Randy Marion Commercial Dealership would market its cargo vans in the US, the penny stock has been struggling. Furthermore, Elon Musk's recent announcement about Tesla continuing to lower prices has put pressure on all electric vehicle competitors, most of which are not yet profitable. Mullen stock has been hovering around its 21-day moving average since February and has rarely closed above its 9-day moving average, both of which are currently at around 10 cents. Although the moving average convergence divergence or MACD indicator signaled a bullish crossover on March 30, the stock's downward trend has persisted. The company needs to execute a reverse stock split by the second half of the year to meet Nasdaq's listing requirement of having a share price above $1. In another news, Mullen recently unveiled its new polymer solid-state batteries for the Mullen Class 1 EV cargo van. The company claims that this new technology will increase the van's range from 110 miles to over 200 in the near future. This development shows Mullen's commitment to innovation and highlights the potential for growth in the EV market. Mullen's stock price has been relatively stagnant, hovering around 10 cents per share for several weeks. However, the recent news of its cargo van supply agreement with the Randy Marion Commercial Dealership caused a brief surge in the stock price. Since March 23rd, Mullen's stock price has shown a bullish crossover pattern on the moving average convergence diversion indicator. Nevertheless, maintaining the 10-cent support level is crucial for Mullen to keep investor interest alive. In case this support level breaks, there might be a significant sell-off by investors. Mullen stock has surged by over 34% to $0.1139 in pre-market trading on April 21st, following the release of a new patent filing on April 20th. According to the filing, Mullen's R&D joint venture has created an energy management module, or EMM, that has the potential to boost an electric vehicle's range by 60% to 70%. This announcement is timely for Mullen as the company's stock had hit an all-time low on last week. Exciting news continues for Mullen Technologies Incorporated, as shares opened over 25% higher following the submission of a Form 8K detailing the Mullen Advanced Energy Operations, or MAEO joint venture with Global EV Technology and EV Technology, collectively known as EVT. Lawrence Harge, the founder and chief scientific officer of Global EV, also made a significant announcement via live stream through Meta Platforms' Facebook.
Yes, we will be the next Tesla. And not only that, we're going to let Saudi Arabia make their announcement. Okay? And I'm at liberty to say this because I had this on the table before Mullins come in. But now Mullins are a partner. And this is not what somebody said or what you heard. This is reality. $10 billion contract with Saudi Arabia and more to come. Now let Saudi Arabia make the announcement in the next 2 weeks. And if they're going to put it on the Saudi Arabia Stock Exchange, they would have to make the announcement, whatever they decide to do. Mullins and Lawrence Harge is here to assist them. They have countries like Yemen, Israel, all of them have joined in to take this technology, and they're going to produce it in Saudi Arabia, and they're also paying for a manufacturing plant to come to Michigan. That's in black and white. So the SEC, if you're watching, that's already agreed upon.
The purpose of the MAEO joint venture will be to advance a device previously known as a battery life enhancing technology, along with EverCharge technology and/or energy management module. The technology will focus on improving battery life for a variety of applications, such as extending the range of an EV. Thanks for watching this far. Let's jump back to the video. Mullen Automotive Incorporated is an early-stage EV startup that lacks production and revenue, making it an attractive investment. However, it could be a compelling speculation opportunity as the company appears to be nearing production and revenue. Mullen has several promising prospects, and even just one of them could propel the business forward while it focuses on launching its flagship model. You might be wondering how Mullen could generate revenue without producing its own cars. The answer lies in CEO David Michery's strategy of assembling vehicles for offshore manufacturers to generate revenue and fund the company's progress. The latest development is a resolution of a long-standing dispute with Qiantu Motors, which paves the way for another Mullen model to hit the roads. Mullen Automotive has been actively seeking partnerships with other manufacturers to produce revenue while it works on the rollout of its flagship model. One of these partnerships is with Qiantu Motors, which produced the Dragonfly for 2 years before halting Mullen's plans. However, after 2 years, the companies have agreed for Mullen to license the IP and distribute the Dragonfly in the US, which is expected to begin soon. The Mullen GT is expected to be Mullen's flagship product and generate significant revenue for the company. With these new developments, Mullen Automotive's future looks more promising. However, it is essential to note that investing in the company is still speculative due to its early phase status and lack of production and revenue. In addition to producing the Qiantu K50 supercar, Mullen Automotive has also been working on producing Class 1 EV vans. Last year, the company received a large order of 6,000 vans worth $200 million in revenue from the Randy Marion Auto Group in North Carolina. Additionally, Mullen's iGo van has already been released in Europe and received by Newgate Motors, who are still advertising the van prominently. Despite Mullen Automotive's recent production and revenue developments, the company's shares are still facing a downward trend due to short selling and dilutive sales of shares. Currently trading at less than 13 cents per share, the stock's value is at a level that is almost too low to overlook. Although there is a risk of the stock going down to $0, there is also a chance for triple-digit gains. It is important to note that this stock is not worth betting the mortgage on, but it is worth considering a small position. Ultimately, to profit from the stock, one must invest in it first. While there are risks associated with investing or speculating in Mullen stock, there are also potential rewards. With the company's focus on producing EVs and the increasing demand for sustainable transportation, Mullen could be well positioned for future success. So, what do you think about Mullen Automotive and its future prospects? Are you interested in investing or speculating in the company? Let us know in the comments below. If you enjoyed this video, please give it a thumbs up and consider subscribing to our channel for more content on the latest developments in the stock market. This is Fred. Thank you for watching and see you in the next one. If you want to see more on this huge funding for Mullen Automotive, check it out in this video.